I guess my question is, do you think that it's risky putting all my extra money towards a robo-advisor? It just seems like for 0.25%, I probably would net more positive than the expense of 0.25% with these maneuvers. I know that these are things theoretically I could do on my own. But as the account grows larger, I would imagine they have better resources and better algorithms than I do.
This is one of those dilemmas, right? Because there's not necessarily a wrong answer here, but there's nothing here that I'm getting super excited about either. A robo-advisor that doesn't cost very much doesn't cost very much, and that's a good thing. The less you pay for advice, the more of your money you keep. Fees matter. And so you're right to be looking at that and asking yourself, am I getting the value out of this that I should be getting? My issue with a robo-advisor is that I think there's just a very narrow niche for them, right? If you need an advisor, you probably need an advisor on all of your accounts. And with a robo-advisor, they're not going to do all your accounts. They're going to do your taxable account and maybe your IRA. And you're going to be on your own for a 401k. Well, if you can do it on your own, why do you have a robo-advisor for the taxable account, right? If you can't do it on your own, why don't you have a real advisor that's advising and taking care of all of your money? And so I think it's a pretty narrow niche of people that can actually use this. It's people with nothing more than a taxable account and a Roth IRA. What does that mean? That probably means a resident. As far as our audience goes, there's not a lot of people that don't end up having more accounts once they get out of residency. So I think the niche for robo-advisors is just not very wide. And it's a product that they're trying to sell to a larger audience. And I think there is a place for it for sure in people that need an advisor and can just use a robo-advisor to manage their assets because all their assets are in a taxable account and an IRA. I think there's probably a niche there, but I don't think there's very many doctors in that niche. And so I don't know that it really works for the people that listen to this podcast very well. They try to sell it with the, tax loss harvest. Well, that's great, right? Tax loss harvesting is worth something, but is it worth 0.25% a year on $1 million portfolio? No way. No way. You're not going to get that much tax benefit out of that, right? 1% a year on $1 million portfolio is $10,000. 0.25% on $1 million a year is $2,500. What's the biggest tax benefit you're going to get out of tax loss harvesting? Well, $3,000 a year against your ordinary income. So maybe that saves you $1,200, $1,400 in taxes, right? And you're paying $2,500 for it. That doesn't pencil out. You're not going to get enough of a benefit out of that in order to pay for it. And the issue with direct indexing is fine. Maybe there's a little bit of tax efficiency gains there. But what happens when you change your mind, right? You change your mind. You no longer want to use this strategy. You want out of Wealthfront. What do you own? You own a whole bunch of individual stocks. And you've got a mess on your hands to clean that up. You got to sell them. You got to hold them. You got to figure out which ones have losses and gains and try to offset them as you get out of that and into, index funds. It's a lifelong commitment when you have a strategy like that in your taxable account. And if you're not ready to make a lifelong commitment to Wealthfront to manage that tax account for you, they've only been around a few years. They may not be around in 60 years when you still need them to be managing that account. And so, I'd be pretty careful adopting that sort of a strategy in a taxable account. What are your thoughts on robo-advisors, Thisha?
Yeah, Jim, I would agree with you. Especially if you're a white coat investor, you've been listening to this podcast for a while, you most likely can do this on your own without the extra costs and really just very marginal gains by going with a robo-advisor. Don't have a hugely strong opinion against using robo-advisors, but I just don't see it being that useful for me or anyone else like me.
Yeah, I think that's the truth. Tax loss harvesting, right? This is one of those things you do a few times in your mid-career, and then you've got so many tax losses that you're never going to use them all, right? Imagine you've got $1 million taxable account, right? And you hit a big bear market. And, maybe you're able to tax loss harvest $100,000, $200,000, right? At $3,000 a year, how long do $200,000 in tax losses last, right? 6, 7 decades, right? You've got enough. How many more tax losses do you need? Unless you've got some sort of tax loss, some capital gain coming up in your life that you need to offset. That's the only reason I keep grabbing tax losses is because, well, what if I sell the white coat investor someday, right? Maybe I could use some of these tax losses. And so I keep booking them when it's convenient and when I have a big tax loss. But, I was way too excited about tax loss harvesting early on in my investing career, because then you come to the next bear market and you get so many tax losses, you're never going to need them again just from doing like two trades, 2 round trips with the tax losses, and all of a sudden you have tons of tax losses, and you don't need any more. Once that taxable account gets to a certain size, this is not, a great use of your time or your fees to pay somebody else to do it for you. All right. Hope that helps, David, with your decision whether to continue to use Wealthfront or not. I don't have anything against the company. They do what they do. You can read what they do. And if you feel like that's adding value, you can try that. Just try to see the end from the beginning and decide if that's really something that you want long term. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.
The hosts of the White Coat Investor podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.